How's everybody doing? Thanks for joining me. This is going to be a quick stream tonight. I just wanted to come in and talk about some of the trades I've been making. So let's get right into it. Over the past 2 weeks, I've only made a couple of trades. I've been looking at Pepsi right here. I didn't make any trades on it, but I've been watching it because it had this nice drop on earnings, which is actually what I was waiting for. The trade I did make was on Grocery Outlet, which is up here on the top right. I was buying it down in here when it was dropping below 25. Once this thing starts to get below 25, I start to like it, so I was picking up heavy in here. And the problem with it is that it doesn't have a whole lot of volume. There aren't a lot of people that know about this stock or trade it. And I'm trading the options on the stock, which are very light. So the spread is huge most of the time. So all of this movement, if any other stock, you would have made a ton of money on this. But I barely made anything on it because I'm looking for a bigger move than this. But when they reported that they bought United Grocery Outlet, which is a different company, the stock shot up yesterday after hours. And I thought, okay, here we go. This is a chance to make something as long as something dumb doesn't happen. Well, something kind of dumb did happen. I still made money on it. I still let go of most of them. I have some left. But Deutsche Bank, I should say, they decided to cut the price target to 31 from 34, which doesn't help. They didn't need to do that, but they did it. Because they're a shady bank. I don't like Deutsche Bank. I never have. When you hear about a bunch of weird stuff, Deutsche Bank and Bank of Santander are like two foul banks. So no surprise that they have to be the ones that come in and screw me over here. Because that would have actually been a pretty good gain if it had stayed up. But luckily, there was still more interest in it. So the contracts went up by about $20, even though the spread was much greater than that. And on paper, it looks like you make more money than that when that happens. In this case, I probably only made about $20 a contract. So I had a bunch of those. I let a bunch of them go. I'm still holding on to some of the rest just in case. I've made pretty much my money back. I mean, I left enough on the table to where I'm some of my initial investment is still in there, but most of it is taken out. And that's really what I wanted to do because sometimes it doesn't move as strongly as other companies do. So I didn't want to have too much in there for too long. But the fact that I got this nice little jump and was able to take some out earlier in the day before the drop hit. Yeah, so you could see after hours, it popped up quite a bit. I thought, oh man, as I was looking at the contracts after hours, they had changed prices a little bit, but not that much. It still looked really nice. And I thought, okay, this probably isn't going to hold. I sort of expected it to come down. This isn't too surprising, actually, this kind of fade with that whole downgrade by Deutsche Bank. And after hours today, it popped up again because a lot of stuff actually did. Even though it was a volatile day, there was still some after hours corrections in a few different stocks. But I still have some more. So if this continues to pump up, that'll be great. I think it could because buying that other grocery outlet company is actually a good thing for them. But the way I see it is even if there's a big reaction, that's still positive for them because they're only in a small portion of the country. They're already doing as well as they are by only being on the West Coast. It had this nice little fade throughout the day. So when it was testing VWAP, it was right around here, 8:30-ish. Yeah, this is about when I dumped everything because it was testing VWAP. It had come down. It kind of pumped a little bit and it was struggling to get over VWAP. And I thought, this isn't really the day to try to hold these things. So I just dumped all that. It's great I did because it was fading for the rest of the day. And I mean, if this thing pumps up next week, I'll probably be mad that I got rid of those contracts. But with options, just take your gains. There's so many people trying to get these million X plays with options. It doesn't work out like that. I mean, usually when you're up with options, you're up for a few days and then your gains go away. Or maybe you're up for a day, or maybe you're up for a portion of a day. So it's like when you're up, you take gains. I know the options can move like crazy, and that's the kind of thing that your wet dreams are made of, but you just got to take your gains. They're going to be very dry dreams if you try to hold them for too long. So anyway, that was my trade over the past 2 weeks. I made sure to get a little something on this while I could. I'm still holding the rest, and it wasn't a bad little trade. I mean, it could have been a lot better if it was a higher quality stock. This, I mean, look at it every day. It's just up, 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 up. Like if I had Pepsi when it was doing that, because I actually did trade Pepsi and I let it go. So it had this fall. I started buying Pepsi. Here, let me put it on the main screen. So yeah, I had this nice drop. Every time it gets into this range towards the low side here, I like to pick it up. So I was picking up contracts through here. and it started to pump up. And I think this nice green day right here was where I ended up dumping it somewhere, towards the end of the day. Because when you see green like this, it's usually your chance to get out. And the next day I thought I was a genius because it went way down and then it popped back up. And I thought, oh, that's too bad. I missed all that. But that's fine because earnings, it just dumped right back down. And I don't like to hold these things through earnings anyway. These red and blue dots tell you it's an earnings report and a conference call. Sometimes you'll see numbers come out and then the conference call will change the direction. So I like to be out of these things when earnings come up, just because you don't know what's going to happen. Yeah, they could go to the moon, they could drop, whatever it is, but it's just better to see what happens with earnings and then try to gauge the reaction after. So yeah, this one, if Pepsi had moved the way Grocery Outlet did, I mean, those contracts would have been up a ton. It would have been up like 5x. But right now, I almost bought some today. It's getting down to this low level where I like to start buying in. I don't like to buy all at once ever, no matter how sure I am, just because you really don't know with options and with stocks in general. I mean, stocks are so volatile and options are way more volatile than stocks are. So it's better to be safe than sorry. I like something like this. This is perfect for me because I like to, probably on this day is probably when I started. When you see these nice, like a big red day and then some consolidation, another big red day, that's probably when I started buying in because I usually hit these low points. I've noticed like a lot of times when I buy is right when this stuff starts to happen. So I'm starting to get this intuition of when these bounces are going to happen because you miss out. You keep wanting more and you think, here, let's get lower, lower, lower. And then they bounce and you miss it. So I don't know, usually I'll hit these kind of areas, but if you see, that wasn't the end, it was still going down. So even though I got this nice little area right here, we went further later and I added when this happened. So a lot of people, they'll get all in somewhere in here and then maybe they won't get the bottom and they'll just see their gains, or they'll see what they put in just drop throughout the day. And they'll get scared when they see this the next day, which is why I just ease into it. Because if you let's say you get it at the very bottom, right? Let's say you picked it like right here, you only got one contract and then it shot up. Oh, well, big deal. That's still some money. I mean, these contracts are a few $100 a pop. All right. I don't know if anybody saw that, but my program was just wigged out for a second. All right, it's back. If you bought one contract and then you let it go up here, great. You made a few $100. That's awesome. Or maybe you made $50. I don't know. Whatever it is, if you're using a lot of money and $50 is nothing, well, whatever. And if you don't have a lot of money, $50 could be great. So the way I see it, it's like, it's better than losing money. Maybe you didn't make as much as you thought, but it's so much better than losing money because that's all you're going to do at first is lose money. Anyway, so I like this. It was a chance to pick up contracts slowly throughout this little section right here. And then when you start getting these pumps, that's when you can unload. See, this one, the reason I didn't unload on this pop right here was because it was just too quick. Like it spent the whole day going up, yes, but then the next day it came right back down and it just wasn't right. I don't remember what the deal was at this point. This could have been market related or it could have been Pepsi related. I don't know, but I like to hold these things for a little bit of strength and I'm looking at a range. Let me zoom in on this section right here. So down at the bottom, you can see this is the range that we've been in ever since this earnings dip. It's kind of sat at a low in the high 150s, low 160s, I guess to mid 160s. That's a nice little spot to pick it up. And then once it gets above that, it tops out somewhere around here, which you can tell right before this big candle right here. That would be a spot where there would be a lot of risk assessed. So people are going to get in and out right here. And you can see this spot right here lines up quite well with where it would top out normally and would go above that, it would come right back down. I'm mostly trying to get the lowest part of the range. We've had some sags for a while, like this is already going. It could pop next week. I don't know. I'm kind of hoping it drops a little bit lower. I'd like to see a nice breakdown without really bad news. That's what I'm looking for. I titled this How I Consistently Make Money in the Stock Market. What I do is I look for a stock that's beat up that doesn't have that bad of news. It has to have some kind of negative news, but you have to be able to judge how that news is going to affect the stock in the long term. Because any given day, bad news can just wreck a stock, even if it's a really good stock and even if the news isn't that bad. I mean, the reaction can just be crazy because sometimes people who have large positions are adjusting their position and it may not have nothing to do with the news that's going on, but their volume has caused huge movements in the stock. So I like to find something like that. If you see really bad news and the stock has dropped a bit or not that much, I don't like to touch that, because that is a recipe for a late circulation kind of a drop. Sometimes news takes a couple of cycles to work its way through the traders. You'll see like a news article come out and you'll see it in your stock programs, or maybe you'll see it if you're searching on Google or something. If you're specifically looking for news on a stock, you might see something right away. And a lot of the big traders are going to see that stuff probably before you do, or around the same time that you do. But that's not most of the people. That's actually a small fraction of who will be trading this. A lot of people that own this stock are busy with other things, and they're not going to find out for the next day or two. So sometimes you'll see really bad news that doesn't move the stock that much, and you go, okay, whatever. When that happens, I don't want to touch it at all, because if the news circulates in a second round or a second wave and then it drops, I mean, that's when you get trapped. So I like to let everything kind of flush itself out. It's been a few days since the thing dropped, even though it had this little pump. This was probably just a squeeze to cover all of the shorts that were profitable in here, because you can see the next day it came right back down, which actually this stock has a lot of these. I mean, look at this really green day and then the really red day right after. It's really green day over here, really red day right after, which is why when I get these kind of things, I dump. If you get two of them in a row, like when I was buying all this stuff and I got, a good day here and then another good day here, that's when I just go, I don't want to push my luck. 2 good days is about enough for me in this stock. And that's the other thing. You have to pay attention to the behavior of any stock. Oh, here we go, Salome. Are you as bullish as most people seem to be with crypto? I feel like some of the gains may already be baked in, and I'm selling some alts now. Okay, yeah, let's switch over to crypto, because I did want to talk about that. Oh, maybe that's the thing. Maybe that error message I got isn't going to let me. Well, that's okay. I got to back up. There we go. That looks terrible because I have 2 volumes. Okay, there we go. So, Bitcoin. With crypto in general, this is the kind of market that I've been waiting for. Let me put this on a longer time frame so oh no, I shouldn't have done that. No. Oh, that was stupid. Okay, well, now I've got 2 things that aren't working. Okay, ETH. You're my last hope. I'm not going to change anything. I'm just going to maximize it. So with crypto, I don't really want to dump anything just yet. Crypto is a difficult one. It's a lot more volatile than stocks and derivatives for the most part. It's a lot more hype based than those. But the thing is, we have a few events coming up right now that I am a little more bullish on than I would have been in the past. Number one, the obvious one is the halvening. Halvening should be coming up in the next couple of months. That's it's not a predetermined date. It depends upon when it gets to a certain block in the chain. And then the rewards that people get for mining crypto will be cut in half. So every 4 years, the amount of money you can make by mining the stuff is cut in half. And it does that until I think the last coins are mined, or maybe it does it indefinitely. I don't know how it ends, but for now, every 4 years, you're getting fewer and fewer rewards. So that's supposed to keep scarcity up, which hopefully will drive the price up. So I don't want to let go of crypto before that. The second thing is, we had those ETFs that were approved by the SEC. Now, there's still more work to do. There's other ETFs. There's all kinds of stuff surrounding that. But that's very bullish. Institutional investors are going to be adding more money to the blockchain through all these big companies like BlackRock and Vanguard and all the ones that filed for ETFs. So you were saying, Salome Fishby, that you have some crypto, but you've been kind of letting it go because you have gains, and I'm assuming you're a little worried about it. And I understand that, because that's with crypto. I'm always worried about it. I mean, crypto can go to zero tomorrow. It's technically possible that any investment can go to zero tomorrow, but it's way, way more likely that something like crypto will go to zero instantly than something like stocks or derivatives or Forex or whatever. Because there's so much more, there's a huge system that's built around everything. And crypto is very independent for the most part, even though it's becoming less and less independent because it's being regulated slowly over time. Governments are using it, people are using it, organizations are using it. But right now, this is not the time for me to be dumping crypto. You can do whatever you want. Everybody has to make their own financial decisions. But for me, I don't have as much crypto as I would like. When it was sitting down in the teens, I wasn't buying as aggressively as I wish I had. I did buy a little bit, but I was concentrating, like I always do, more on options. That's my main thing, is trying to make money through options. And it's good because I learned a lot, but at the same time, I should have been as active with crypto as I was with my long account, because I've been good with my long stock account, where every time, at least once a month or every other month, I buy a few shares of something, And I usually just, when I get some money, I put it in the account and then I don't buy stuff right away. I wait for a super red day. I wait for those days where you hate life and all in your account looks like crap and you just don't want to trade anymore. Those are the days that I go and I open my long account and I buy some of the stuff that I want to own long term, because those are the best days to do it. Number one, it helps you feel better. When you're feeling all depressed because you're looking at your account and been like, man, I had so much more just a few days ago. I could, if I just taken everything out, I could have had, like, you're always going to go through that. You're never going to time it perfectly. So don't beat yourself up. But if you look at it like, oh, well, this is a great day to buy some of my long investments, then you go and do that and you feel a little better and you end the trading day without being all depressed and messed with your head. So with crypto, I wasn't doing it as often as I should have been. So I don't have as much as I would like. I really wish I had a lot more. And I wasn't expecting it to continuously pump this fast, but that's what crypto does, which is why I never got out of it. And even when it was low and everybody was down on it and I was saying like, this is time to buy, but I mean, don't go too crazy with it. That's the time to do it. Unfortunately, it's never easy. And I did buy some, so I'm up and I'm not going to dump it. I'm very aware that Bitcoin could drop well below where it is right now. It could be back in the teens easy, but I don't think that's the case. I think more likely than not, we get some continued movement. Like there's going to be some consolidation. This was also in the wake of those ETF approvals. We've got the halvening coming up. I've been seeing a lot of interest in crypto from other people lately. The people that were giving up are starting to kind of think about crypto again. So that's another reason why I don't really want to be out yet. Now I'm not going to put like everything I have in it. I'm not going to go crazy because it's already pumped so much. And no matter how much I think it would continue to go, my strategy does not allow me to just go crazy at any point. Yeah, there would be times to do it. Tesla, when Tesla got to 600 and I was like freaking out because it had been sitting around 200 and 300 forever. I mean, putting everything in Tesla would have been a great move, but how often is that the move? It's almost never the move. And I don't want to risk it. I'd rather just miss a little bit more and wish I had. It's better than giving up and it's better than being catastrophically wrong. So my thought is right now, even if crypto has a little bit of, if it has a nice consolidation, like if it drops, let's see, we're talking about Ether right now. So they're getting up to 3K on Ether almost. So it topped out just below 2,900 and now it's kind of down to 28, high 27s. If this thing retraces back to at least these two big pumps right here, these are the points that I would be looking at. So this consolidation shows that there is a little bit of support here. There's volume down to show you that this move actually did have something behind it, but the volume wasn't any more extreme than it was here. Like it was a little bit lower here than here, but not by much. I mean, it was basically just huge volume on these green pumps, and then everything kind of levels out when it starts to consolidate. So I would look at these kind of areas as places to snag some more, since we're kind of at this area right here. The second green pump brought us to 20, let's call it 2750-ish. And that's kind of where we bounced before we started coming back a little bit. We could settle here for a while, but if we get down back to this 26 level, or even better, down to this 25 level, then that's where I would be probably going in a little bit harder. But, I don't know. This could keep going. I have no insight as to whether or not this is actually going to keep going or what. I mean, crypto is so unpredictable that I just don't like to mess with it. I basically just like to look at it as kind of a lottery play. Like if you play the lottery, you don't expect to win it. You don't put a lot of money into it. You just sort of go like, all right, this is fun. I'm going to grab a ticket and then I'm going to forget about it. And that's what I do with crypto. Cause if you sit there and you try to trade it or you try to watch it, it is so difficult. I mean, when it just goes up consistently, if you don't know any better, it would be very easy to make money. But unfortunately that never ends well, because you'll make money and you'll make money and you'll make money. And then one day you won't, and you won't know how to deal with that. So to me, it's just a better lottery ticket. That's kind of what I'm thinking with crypto right now. I just want to wait out what I have. If we get some nice dips back down to these areas of support, that's where I want to start doing that. Hey, High Roller 420, how's it going? Thank you for following. I appreciate that. And thank you for subscribing. Awesome that you're here hanging out. This is a very short stream. I'm just kind of talking about crypto and a few stocks right now. I'm actually having some technical problems, so I can't really go into everything that I wanted to, but thank you for the follow and the sub. I really appreciate that. I'm streaming every other Friday night. Usually I'll play some games and stuff too, and I'll have a longer stream. But right now I'm kind of getting the studio dealt with. So let me finish my thought here on crypto before I get back to the last stuff. So yeah, so what I'm looking for with ETH and, Bitcoin in its price points that would be similar to this, I'm looking at snagging some more if it comes down here, not super aggressively, but more than I have been. And if it comes back down to this 25 level, this is where I would really want to start going in. Now that the caveat on that is the news. If there's any really, really bad news about crypto, then I don't want to be so aggressive with the dip buys. Right now, nothing bad has come out. I mean, we're still early on the halvening, and there's going to be a lot of hype before it, which is why I don't want to dump it now. There's usually a little bit of a run up into the halvening, and then nothing happens when it does happen. So a lot of times people will sell right then because it's like a buy the rumor, sell the news kind of event. But that is usually a chance to dip by a little bit too, because the thing's going to keep going. The whole point is it's becoming more scarce. And every single time this happens, the same, it's kind of like there's a buildup and then nothing happens. People forget about it and then it starts to pump again. So for me, I'm just adding. I'm not dumping anything yet. If things get shaky, then I'll consider it. But right now, I'm mostly looking forward to this institutional investing. I mean, the more ETFs we have, the more chances we have for money that wasn't in the system to come into the system is a good thing. To me, it's super bullish. So, Salome, what about you? Let me read your thing again. You were saying that you have some and you've been selling some of your alts. I don't know. See, the alts are a little different, because if it's an alt that's been around for a while and it's entrenched, then I would hold that too, because it's essentially going to move with the market. But if it's an alt that's new or an alt you don't know much about, well, then I mean that's always risky. So I don't really mess with those anymore. I mostly stick to the main cryptocurrencies, the ones that are easy to trade, the ones that are well known and people talk about. Like if you can talk to your friend that doesn't know anything about cryptocurrency and they've heard of it, that's probably an okay one to get. But if you're like, hey, have you heard this crazy new coin that just came out? Yeah, that's probably not the one to do. So let's see. I'm going to take some profits and maybe swing trade. Well, you've been swing trading Ether pretty well, so I wouldn't. For you could probably continue this range. Well, actually, see that's probably something for you. Even when these things move up, they don't stay in this upward pattern forever. They usually end up consolidating. So if you do what you were doing before, where you find your little ranges and then buy when it gets to the low end of the range and maybe dump some when it gets to the top, you could do that. But my caveat would be buy more than you sell. So each level you build up your base a little more. So let's just say like you sell, I don't know, let's say 10 units of it. Make sure you're buying like 12 or 15 or whatever it is, just so that way you build up that stash, because if this thing keeps going, you're going to wish you had. Now here's the part that I'm cautious of. If Bitcoin gets back up to its previous high, which was the high 60s, that's the part where it gets a little bit unsure. Now, if that happens before the halvening and before a lot of these ETFs are even really going or really popular, I wouldn't worry too much about it. But if it takes a while to get there and the big events happen before we get to that point, that's where that like 68, 69K is a little sketchier. But the way it's been moving, I wouldn't be surprised if it does get up there. Now, it has been kind of sitting at this like 50 mark for a few days now. It's going a little bit above 50, a little below 50 for Bitcoin. Obviously, this is Ether, so, you got to adjust it to this price. But I mostly watch Bitcoin just because that's the one everything tracks. So I'm trying to pay attention to 3 different markets. The easiest thing I could do is like just look at where Bitcoin is and do a quick scan of everything else, and then I can pay attention to the things that need more attention. So that's my thought on Ether. I would say like I wouldn't dump it all yet, and if you do your swing trade, then maybe try to grab a little more than you let go of. But either way, it's still crazy. So what else we got here? I'm unstaking my SPS on SPL on Splinterlands. Oh, okay. I've been staking whatever ETH or BTC I come across. That's probably better at this point, just because when interest is up in the crypto market, Bitcoin and Ethereum are going to be the two that benefit the most. There are little pumps of other things here and there, but it's just easier to track the things that more people like. The reason I want to be in the things with more people is because there's more volume, and the more volume you have, the better picture you can get of the landscape. Like if you see a big move on high volume, that tells you that that's a real move. But if you see a big move on a little bit of volume, that tells you that there's not very many players making that move, and for whatever reason, other people aren't watching it. And when they come back, that move could correct. So I always like to look at volume. Like some people say volume's everything. It's not. I mean, it's only one piece, but having some kind of volume and having widespread news access makes it so much easier to follow, to be more confident in your moves. So That's my thought. I just want to watch crypto. I'm letting it go up. I'm adding a little bit on dips. It's looking good right now. So until something changes, because that could, like I said, that could change on a dime. Always, don't take anything I say as like, oh, this is it. It's like, no, every single second of every single day, this stuff could change. But right now, everything just looks great. So I'm not changing anything on my positions for any of the crypto right now. So that was the crypto section. Okay, so what do I have left that I can actually talk about? Because everything else is not working. We did Pepsi, we did Grocery Outlet, we talked about Bitcoin. I'd like to talk about the overall market, but I can't get the thing to load, so I'm not really going to be able to do that. I'll get the price. The SPY was just below 500. It looks like when it closed. It was very volatile today. Last couple of days were pretty crazy. I mean, we ended up not moving a whole lot, but we did move around in that range quite a bit. It's like we did a whole lot of moving to get nowhere, basically. I mean, the fact that the SPY's been over 500, or if you want to just say the SPX index has been over 5K for a little while now. We've been at all-time highs for a while now. I mean, the way this is looking, earnings is partway done. I'd say like a lot of the big companies have reported, but there's still a bunch to come out. So earnings hasn't been looking as bad as people expected it to. And this has been, I've said this every single quarter for the past like year and a half. Every single quarter, the same thing comes out. Oh, it's the companies aren't going to do this well next time. You watch this. And every quarter they do just fine because the economy just keeps moving. Like the money is continuing to flow, but the news stories are getting into people's heads. And it's making it really difficult for people to understand what's real and what's not. And what is real is the fact that the numbers aren't as bad as the rhetoric. So let's see, High Roller 420, you went short on BTC a minute ago and you made 6K. Oh, nice. So you went short on Bitcoin and you made 6K a little bit ago. Was that obviously before this pump, or did you catch one of those dips? Let me pull up ETH again. Like when did you go short? Like back in this area, or were you like catching one of these quick drops right here? Because if you caught one of these, great. For day trading and things like that, that's good. I don't really day trade. I don't like that. There's not enough certainty for a day trade. I'm a swing trader just because it's so much easier. You don't have to be like perfectly right away. You don't have to sit there with your stomach turning while you watch your monitor. I like to let things kind of settle for a bit, get in when I can, which is why when I buy things, I come into the market partway through the day. I like to let the morning happen, let all the volatility and craziness happen, and then it kind of fades throughout the day, and I'll start to get in towards that middle of the day when everybody else is getting out and the prices aren't really coming back, because sometimes they'll come back later in the day or they'll start coming back the next day. I mean, that's what I like to do, is get in when nobody else is in there. I don't like trading with all the crazy people. Let's see, you caught the last dip. I do a bit of both, whatever I feel like will happen. Okay, so you have some long Bitcoin as well. Do you have other crypto too, or are you just messing with Bitcoin? Because I mostly my main investment is in Bitcoin and Ethereum, but then I have some other alts. Like I have a little bit of Litecoin and a bunch of other things, man. I Ethereum Classic. I think I've got a little Cardano. I've got some Tezos. I've got some Shiba Inu. I've got some Dogecoin. So you only beat BTC. That's the way to go. I mean, Ethereum's not bad, and some altcoins aren't bad, but really the most important one to watch is Bitcoin. Until Bitcoin is dethroned as the main cryptocurrency, the one that everything is tied to, that's the one to watch. Not to mention, that's the one that you can make a good amount of money in with how much it moves. So that's good. So you've got some long Bitcoin and you short sometimes. Do you do anything with stocks or options or anything like that, or are you strictly cryptocurrency? Because I like to spread things out. Like lately, I've been a lot more into derivatives just because the strategies I've had have been working so much better. But unfortunately, if I had just stuck to my investing strategy when I first started, I would have so many Bitcoin and Ethereum right now, because I was in during all those crazy drops a few years ago. And it was. Oh man, I talk about this all the time. I know, but I would have had so much money if I had just stuck with that. If I hadn't have done any trading at all and just bought cryptocurrency, and I mean, I was buying stocks too. I could have just like used a small portion of my money to buy cryptocurrency. I'd be way better off right now. Let's see, you need to get Bitcoin in your Roth IRA account, but I don't know, worried about Bitcoin long term. Well, yeah, see, that's the thing. That's why I'm I don't know when you tuned into the stream, but earlier I was talking about how cryptocurrency is a lot more. It's on shakier ground than any other investment because yes, it's newer, but mostly because it doesn't have systematic adoption that other investments do. I mean, it's getting there. The ETFs that were approved by the SEC were great for the future of Bitcoin. Even if they didn't move a ton right away, the fact that more money can come in from people that wouldn't have touched Bitcoin at all is great. And those are the people with a lot more money. Those are way more whales are going to come in. I mean, that can be good or bad depending upon what you want to do with the space. But like if you're a trader or an investor, that's amazing. So that's good. We got the halving coming up. So that's another reason to hold on to that. But with long-term investments, who knows? Because somebody could find a way to hack Bitcoin next week, and then it becomes completely worthless. So there is always that risk. And you're talking about Roth IRA, so that's retirement, that you do have to think about that as well. However, if you're thinking about it for a retirement account, something like one of those new ETFs with a company that you trust, I mean, and I say trust with quotes because it's like a lot of these companies are ruining the world, but like, I mean, trust with your money. It's, if I trust, not even so much with your money, I trust them with their own money. So if they're gonna make money for them, like I would imagine that it's a little bit safer than just going into the asset, because then you can get some insurance through that. Because if you're buying an ETF, those are usually going to be insured. Now, I haven't looked into these to see if they all are insured, but I think that's part of it. I think part of the reason that they were approved was because they could be insured for investors. So if you can buy in through one of those ETFs in your Roth IRA, then you would have at least some protection if Bitcoin does go to crap. So there is that. Yeah, so that would be what I'd be looking into if I was trying to do this for retirement. I'm just buying these on I'm getting some on Robinhood. I've got a Coinbase account, getting a little bit on there, and then moving some of it into cold storage just because I want to be safe with it. But at the same time, it's also like, well, there's risks to cold storage too. The device can get messed up. It's a flash drive. It's a glorified flash drive. We all know how flash drives work. So all right, you'll look into that. Think, all right, yeah, check that out. That's because that just happened. I mean, that's within the past few weeks to a month, these things started coming out. So a reputable company with an ETF would be a way to do that a little safer, which is why I'm so hyped about this, because a lot of people didn't want to get into the cryptocurrency market because of the risk. So that's why, to me, this is such a bullish thing, even if it didn't move the price right away. That's the thing with a lot of these. You have to look long term. If changes are coming in that are beneficial long term, then I'm not as worried about price today. And this is why this kind of stuff happens, because people who are worried about price today aren't going to catch this. They're going to keep trading and they're going to miss all this. But I caught it because I was buying in when it was low. I was buying little bits of it. I should have bought more, but I at least did something. And I didn't try to trade it like I was doing before. And now everything's up, And here's the good thing about it. In my Robinhood account, any day that I didn't do anything with my options, or if I lost a little money, the cryptocurrency pumping offset it. So it was like, even when I had a nothing day, my account was up. So that's why I like just having some long crypto and then using some to trade. And that's why I have two accounts. Like, I can hold some of the crypto in one account, and then I can trade a little bit of it in the other. That's what I was saying to Salome Fishby, is like, if you're worried about missing a pump and you want to trade it, don't let go of all the stuff you have. Like, buy 10 units or buy 12 units of it, but only sell 10 units. So that way you're keeping a little bit as you go, but you're taking some of the money off the table. And yes, you could make more if you just invest it and it keeps going up, but like, that could be problematic too. I mean, look at what happened in 2022, right? In 2021, Bitcoin was at an all-time high, and then by the end of 2022, it was at a low. I'm a fan of doing both. I like diversification in the sense that it's not just about diversification of assets, it's about diversification of strategies. I like to have diversification of brokers, diversification of strategies, and diversification of assets. You can get too crazy with that and spread yourself too thin, but if you do that right, then you have backups for everything, because institutions can fail, so it's good to have more than one broker. Your strategy can fail, so it's good to have more than one strategy, and any investment can fail, so it's good to have more than one investment. That's just how I look at that. It's kind of my own personal philosophy. And some people don't do that. Other people do. Let's see. You only have index funds in your account at the moment. That's good. Actually, I think index funds are one of the best ways to go. Honestly, if I had just, when I started investing, just bought the SPY or bought a traditional index fund, I mean, I would have been up way more than I am right now, because the SPY, when I was trading this, when I first started trading the SPY, it was at like 200 something, and the SPY is about 500 right now. So that thing doubled in that amount of time. Now, I mean, that's 7 years, 6 years, 7 years. I don't know, however long it's been. That's a long time to wait for a double. But at the same time, if you're trading throughout that, you're going to lose a lot too. So I think index funds, like people who don't trade and just invest in index funds are the best kind of investors. Just like get an index fund, it's diversified. They're taking care of everything for you. People that know way more than you are making decisions so you can sleep at night. There's always the risk that like the entire market goes down, but that involves a problem with the entire world, not just like your strategy. So I think that's a good way to go. You have an index fund, so you're preparing for the future. You talk about Roth IRA, so you're thinking about taxes, which is why you have that one, and you're also trading crypto. So you've got a diversification of strategy. You've got the best tried and true strategy, which is the long term investing, and then you've got the possible lottery ticket, which is you're trading on cryptocurrency. Now, the percentages you put in either of those, that's up to you. It's always the draw to make money through trading is always really strong, but I think to me it's better to be a little safer in the long run, because I mean, just year after year, the thing I can say is like you always lose eventually. There's never a point where you stop losing. Like you're going to lose, like you're going to do really well. I've been on a tear lately. Actually, I've had some really good trades. I had my best trade ever 2 weeks ago, and before that, I had a good one at the end of the year last year. So like I've been trying to wait for opportunities more, but I know eventually I'm going to get hit hard. So like I've had a couple of trades. Like I traded Pepsi. That was decent. I made some money on that. I just traded Grocery Outlet. I made a little bit of money on that, and I'm still holding some of it. But those really didn't do all that much. But my long accounts, much better. So that's just my 2 cents on the whole thing. I think it's a good idea to have diversification of strategies and investments up to a point. Don't buy 85 different things and then you only make 2 cents per stock or whatever. Because I had a friend that was like, he had like 30 different dividend stocks plus some other stocks, and I was with not a ton of money in them, and I was like, that's good and all, but like you're just not going to make a whole lot doing that. So it's better to be more sure about things and kind of consolidate that, but not so small as to like if one of them goes down, your entire thing goes down. So hopefully that makes sense. Mostly right now, my thing is just kind of hang out on the sidelines and wait. I made that Grocery Outlet trade. I'm still holding some. I'm watching Pepsi because we had this nice drop and on earnings, and it's been trading down. I almost bought some down here because it's at the low side of the range where it's been moving. Right, I've had good trades when it comes down into like the low 160s, high 150s, and if I get any nice green days like this, I just dump them because it's expensive enough stock that the contracts usually end up being extremely profitable from that. So I'm going to be looking at Pepsi. I'm hoping it goes down a little bit more next week, and if it does, I'm going to start snagging some. But other than that, I'm waiting for the March Fed meeting, even though I don't think it's going to be eventful after this last CPI reading. That was the last thing I have to talk about. Here, let me see. My best trade was actually on Amazon. I bought December 5th and sold December 23rd. Oh, nice. I would go over to it if I could actually move stocks right now, but I'm having that technical problem. I made a great trade on Amazon at the end of 2022, beginning of 2023. Same with Facebook. Both Amazon and Facebook were getting just absolutely destroyed at the end of 2022. At that point, I was telling people, this is the time to buy these stocks, but nobody wanted to hear that. Everybody was like, I was getting so much crap for buying Facebook. Like not as much Amazon, because I think people have a little bit more respect for Amazon, but everybody hates Facebook. Everybody despises Facebook, which is why I like it, because it's a legit business. It has a lot of value, and if you can put your personal opinion aside of any social media site and look at the value and where it's going, like Meta just has so much. I mean, they have the total demographic with Facebook. They have the younger demographic with Instagram. They've got Oculus. I could just go on all day with the stuff they have. They got a bunch of cash. They have a great balance sheet. They have smart people making good decisions for the stock. Now, not as good decisions for people in real life, obviously, but like on the money side, they have everything locked down. So when it was getting hammered, I was buying that hand over fist. Same with Amazon, and I let it go way too early. So it's funny you say you bought it on December 5th and let it go on December 23rd, because that was when I was looking at Amazon and just like seriously regretting ever letting it go. I thought, man, that was looking really good. I wish I had held on to it, because I bought it back at the end of 2022 when it was in like the double digits. And same with Facebook was down to like 70 to 90, somewhere in there. That was where I was buying it, and I let it go at like 250. And now, I mean, Facebook, I don't even know where it is now. It's like 400 something, or I haven't looked. I haven't wanted to look because it hurts, but Amazon's been up there too. So Amazon's another one that I like. If like you wanted individual stocks to look for in the long term, Amazon, anytime it gets absolutely hammered, is a great one. They've set themselves as the powerhouse for retail in the future. So online retail, it is Amazon. Even if Walmart is technically bigger, they have their foot in the door, and they're diversifying in all these other ways. So that's a nice little trade. Real quick before I go, what was it that made you buy it on the 5th? Like, were you looking at it at a low and on a dip, or did you see some news? Like, what was it that made you actually go for Amazon right then? Because for me, it was mostly the price and the fact that the bad news wasn't knocking it down any further. So I guess that's one thing that I look for when even though I can buy some puts, I don't short stock, I use puts. I'm not as good going down with the stocks. It's just harder for me to do. But like finding a place where the stock is kind of leveled out a little bit, when volume starts to, like you can see with Pepsi right here is a perfect example. Volume's been dropping, and you can see how low it was today compared to right around earnings. I mean, of course, there's going to be more around earnings because this is when a binary event's going on, and there's always going to be a lot of traffic. But like for those next few days, there was a bit of uncertainty about what to do. You could see it was going up, down. Shorts were covering, and people thought it was coming back, but no, it was fake out. So they were getting trapped. But now that volume's been dropping, like this might pop next week. I might have missed this. I was thinking that all day, like, dude, I'm probably going to miss this right here. But if it goes down a little more, I'm going to be so happy about that. I'll be starting a small position in this and building up as it drops if it does continue to go. But there's always the chance that it could completely crash too, which is why I start small and I just got to ease into it a little bit. So that's mostly what I wanted to talk about today. If anybody else had any questions or anything, let me know. That's what I never finished talking about, the Fed meeting. I want to see what happens with this Fed meeting. We just got the CPI and the PPI this week. They both came in over estimates, but not by a ton. I mean, the PPI was a lot higher than the CPI was. But I was kind of expecting that a little bit, even though I didn't know for sure. I kind of thought like, the market's been pumping, so I didn't want to go for a pop. Usually with the CPI, if I think there's going to be a discrepancy, I'll grab some kind of an upward play, because the CPI can just massively move the market in times like this. Or I should say in times like last year. But now we're getting closer to their target 2% goal. It's in the threes still, but like it's way better than it was when it was 8-9%. But those are the discrepancies that you can make a whole bunch of money on. So the point is, CPI came in, it was a little bit above estimates. The market dropped on that, which is why we had that really nice opportunity. And then it's been kind of coming back since then, because it wasn't so far over estimates that it's like, oh no, we're in trouble. It was expected. Like estimates aren't always right. I mean, there are a lot of times they're really close with like the CPI and the PCE, but I mean this wasn't too out of whack. So I was thinking it was either going to be flat or down, and it ended up being down, and it ended up being an opportunity for anybody that jumped in. So the CPI came in, it's a little bit up, which means the Fed meeting is not going to be as dovish. It's going to be a little bit more hawkish. So we're not going to get a massive pop or anything, most likely, unless other data comes out that makes them switch. Because before we even finished raising rates, people have been talking about rate cuts. Every single Fed meeting, it's rate cuts, rate cuts, rate cuts. Like they're not going to cut. Okay. They need to get inflation back down to their 2% goal. And that's not going to happen if they cut rates. They don't want it at 3. They want it at 2. If they can't get it to 2, they'll consider settling for 3. But they're going to try for a while. As long as the economy isn't broken, as long as employment's still good, as long as companies aren't defaulting like crazy, they're going to keep rates up. Like the reason they would cut is if there was a problem or inflation just got into a better place on its own, which is unlikely because we have so much more money in the system that it's going to be difficult to get it down to that 2% mark quickly. I think they'll do it, but I don't think it's going to happen quickly. So I think we're probably going to be stuck at this rate level for a while. If something breaks, yes, they'll cut. But if nothing breaks and inflation doesn't come down that much, they're not going to cut. So no matter what the media says, when they talk about cutting, don't listen to them. If there's not a reason for them to cut, they're not going to cut. So that's the one thing I could tell you for sure is that they're not going to cut. All right, here you go. So honestly, I just knew it was Christmas and decided to chance. You're going for that Santa Claus rally, huh? That's not a bad one. Sometimes the Santa Claus rally can go crazy. The first year I traded, the Santa Claus rally was absolutely insane. We had this huge drop on rates. I mean, rates were like half of what they are right now. And that was too much for the market at the time. So the market just like tanked. And right before Christmas, Powell comes out and he goes, actually, I think we're going to go ahead and drop rates a little bit. And that just skyrocketed. The market just took off after that. Yeah, those Christmas rallies can be crazy sometimes. I mean, that got an assist from the Fed, but like, you know, for whatever reason, money just comes in around that time. So good job on that one. That was a nice little guess on there. Usually I'd like to go with a little bit more fundamental. So that's, before I go, that's the last thing I'm going to say. The way I trade is a mixture of everything. I don't just do TA. Anybody that just does TA is basically gambling. Like there's a good chance if you watch charts that you can catch those sometimes, but if you just watch charts, that can hurt you because you can look at the RSI and be like, look, it's oversold and it keeps going, or it's overbought and it keeps going. You know, you have to look, like, I like to look at the charts with the fundamentals and the news. So fundamentals, does their balance sheet look okay? That's fine. News, do they have some kind of catalyst that could actually move it, right? And do people actually want to pay attention to this? So if there's hype around a stock, it's got a good balance sheet, and there's a good piece of news, then you could look at the chart and go, okay, we've got all this, and the chart is at a point where the chart is showing that it's at like a nice support area. That's fine. But if you're just like, oh, it looks low because the chart says it's low, why? It could keep going. I mean, especially if you're messing with penny stocks. Like that's why I like to mess with more expensive, well-known stocks, because there's actually something behind it. They're not just going to keep fading. Like if you trade a penny stock that's at $3 right now, I mean, that could be at 3 cents in 2 weeks. I mean, every day could be red, and you could just think today's the day. It can't go much lower. It can't go much lower. Yeah, because they're penny stocks and there's not very many people into them and there's not as much information on them. It's hard to see what you're doing. So yeah, I like fundamentals, which means a good balance sheet, basically, a good income statement. And I like news on it on top of the chart. So that's basically what I'm looking for. I'm looking for a beat up stock that's actually a good stock and with news that isn't as bad as the move suggests. So I can go into detail about that more in the future, but I got to call it right now because I might be losing my voice. So thanks for hanging out. I appreciate it. I'm going to have everything set up at the normal location next stream, so everything will be working, hopefully. I appreciate everybody hanging out. All right, man, catch you next stream. Thank you for stopping by. Thanks for the sub. I appreciate it. High Roller 420. Salome Fishby, thank you for hanging out. Appreciate that. And anybody else that was hanging, just lurking, I appreciate you. I always love the lurkers. It's great to just hang out with the homies on a Friday night and talk about stocks. So have a good weekend. Be safe, and I'll talk to you later.